Thanks a lot for coming.
Thank you for having me.
Okay, so every company has a purpose. Maybe you can tell us what's your mission and what you're trying to do with BoostVC.
Yeah. So I guess the best way to answer that, I'll tell you about my background. I am a fourth generation venture capitalist, but I founded a company out of college called Xpert Financial. We were helping later stage companies raise capital online. At UCLA, I played tennis and was an English major, so like wasn't really sure what I was going to be doing. But then my friend approached me and he was like, "Hey, I'm going to start this thing," and I was like, "Yeah, sure." And then when I joined him at Xpert Financial, we were trying to start a private stock market for private securities. Stock market for private securities, not double private. It wasn't like that exclusive. And basically the general concept is today, where would you go to buy shares of like Lyft or Uber or that type of thing? And we were trying to solve that problem, let's hear in 08, 09, and it's still a problem today. So, you know, we didn't successfully solve it to the masses. And over the course of 4.5 years, I found that I really enjoyed, first off, starting a business, I enjoyed that part, but I really enjoyed mentoring startups. Like about 3 years in, I started mentoring a couple of my friends to help them raise capital, figure out what they were actually doing, helped one of them come up with their idea, build a product, raise capital as a mentor, and I was like, oh, that was really fulfilling. I really enjoyed that. And so doing that in bulk is called an accelerator. And so I left after 4.5 years at Xpert and launched what became BoostVC. We had no concept of like what the value add necessarily was yet. We were like, do we add value? That was the first question. Like, you know, the first, like for seed rounds, you're like, is my thesis correct? Like, is there an opportunity here? And that was sort of the general concept, like, do we add value? And at the end of our first session, it was 7 companies that we accepted, and 6 of the 7 companies raised additional funding. And we decided to say, like, hey, that's positive reinforcement. Like, that is money, that is opportunity that they would not have gotten without us. And so, but in between the first and the second sessions, and this is a long way of answering this question, by the way. Between the first and the second session, I'm giving you like way too much backstory. We decided to focus on a technology. And we looked at a lot of things. Duncan brought up drones, we looked at 3D printing, we looked at a lot of the early market things, emerging technology or frontier tech, whatever the term is today. We call it sci-fi, just in case anyone's wondering. And we ended up focusing on Bitcoin. So we were the first fund to think that Bitcoin was going to be an opportunity. Between Xpert Financial and BoostVC, I actually seed funded a couple startups. So I backed a company called Coinbase. And that company, does everyone know what Bitcoin is? Like, heard of Bitcoin? Have you heard of Bitcoin? Do you own Bitcoin? Does anyone own Bitcoin? Raise your hand if you own Bitcoin. Okay. That is fantastic. By the way, I used to ask that question like 4 years ago, and no one had heard of Bitcoin. It was like those people who raised their hands who had Bitcoin were the ones who were saying, like, I've heard of Bitcoin. And how those people who own Bitcoin, do you have a Coinbase account? So like, it is the largest in the Bitcoin ecosystem. So I had built out sort of a small brand. It wasn't a big deal yet. Like, Coinbase was still going through this space of scaling. But I had sort of a brand in the space, and no investor had said this is going to be a thing. And so we did. So we said this is going to be a thing. We're going to back early stage ideas in this space. And so that's what we did. And we became known as the Bitcoin Accelerator. And then over time, as we became known as that, we realized what we really do. So what BoostVC is, now I'll get to what I actually do. BoostVC, it's an accelerator. We provide housing, office space, and we invest in the startups. Which is like different in the housing aspect, but we try to provide, we're a hub to Silicon Valley. We're for 3 months, it's a 3-month program. And that is exactly what we do. So but basically, to get to the mission, so what we do is we build communities around emerging technology. So we did it with Bitcoin, so we took let's see, we've backed about 65 Bitcoin startups at this point. So if you're a Bitcoin company, like joining our accelerator is like a huge value add because immediately you're hooked up to a network of 65 Bitcoin companies or blockchain companies, whatever word we're using to describe that today. And that's a huge value add because suddenly we know everyone in the industry. We know all the investors, we know all the companies, we just know everyone because we've been around it for so long. Which brings me, so then we added virtual reality because we felt that we could do the same thing, build out this community system in another technology. And so we've been doing virtual reality startups as well as Bitcoin startups, Bitcoin blockchain for about 2 years now. So we've been around for 4.5 years. We've invested in 180 startups. Our companies have raised upwards of $250 million. And VR, we were able to do the same thing. We deployed. We got to know everyone in the industry before it was really a big deal, and then and now we add value to any startup that joins us. So I'll ask a question sort of where I say like, you know, what's the value of an accelerator? It's network. Like, I think venture capitalists can provide 4 things. Any venture capitalist, any of them. Accountability, which you know your mom or dad could probably provide you. Advice, which is either good or bad, and you don't know for 6 months. Money, which is really it's a commodity. Like anyone could give you money technically, but the last thing is network. And so I think those other 3 things are comparable amongst almost any investor. But the last thing is what differentiates all the winners, all the best venture capitalists from one another. And that's what we decided to do with an accelerator. We decided to scale the network by creating a tight-knit community focused around different verticals. So our mission is to do that, but then also to build an Iron Man suit. So
you mentioned a word which I'm not clear on understand. Tighten the network. At the same time, we also scale the network. Both at the same time.
What was the first thing that I did?
Said tighten the network. At the same time, also scale the network.
So what we do is I don't know, tighten I guess would be the way that I describe like the community aspect where we actually provide housing and office space.
Oh, I see.
And where they are actually very tightly knit. They live together, work together for 3 straight months, so they're willing to help each other. Like they're like, oh, you need to know that person, I know that person, that's great. I believe other accelerators have lost that sense of touch a little bit where they don't know each other as well, we call them tribes, but class to class, tribe to tribe. And I feel that that's the most important thing that you can get out of an accelerator. Like the first part of the network is the companies that are in your tribe. Like that is the first part of the network. And then it's, you know, who does the accelerator know who they can connect you to, who can help your business. So that's what we're.
Other than Bitcoin and VR, do you invest in any other sectors?
Yeah, I mean, so we say making science fiction a reality is sort of our tagline. So anything that sort of like is in Ender's Game or like those books that you've read, anything written by Isaac Asimov, we probably invested in some way. And what, you know, AI, but we're pretty interested in conversational interfaces, which is really what you would say if you're just trying to say like, we're interested in like chatbots and bots right now, but those will evolve to more like voice-enabled things. It's just right now, if you're going to get a jump start on like the AI machine learning of chat, you would probably not launch a voice-enabled thing. You'd launch something on Messenger. And then I'm really excited about human augmentation, which is referencing both like sort of the synthetic computational bio stuff, as well as exoskeletons. So, but no one's really, that's not going to be a big deal in the market for about 5 years, but we're looking now. But we bet on markets. So Duncan, he's betting on companies, like he's betting on specific companies in each market. We're betting like Bitcoin does well. We're betting that virtual reality does well, and then we back the entire network basically. And by betting on that, that's sort of how we scale. So
let's talk about Bitcoin a bit. Unlike 4 years ago, right now Bitcoin has been very widely used worldwide. I believe actually, interesting enough, China is, I believe, has the largest transaction volume in terms of Bitcoin and what else. So I'm not sure how accurate is that. But is it still opportunity for earlier stage startups?
Yeah, so when people are talking about Bitcoin, there are three opportunities that Bitcoin specifically has. Cross-border transfer, store of value for emerging markets, and microtransactions. Those are the three things that Bitcoin does better than the current fiat. Fiat just means government currency. By the way, this is an off topic, but I was having a conversation with someone who works at a bank earlier today, and like, they don't actually hold money anywhere, they just buy treasury bonds. And so technically, like, when you're banking with someone, like that cash is just treasury, they're like a middleman. Like, so I'm really pumped on Bitcoin because it's like, they're eliminating a huge inefficiency in the market where it's backed by trust, peer-to-peer trust, which I think generally humanity needs and believes in. So it's a really big deal, and I was sold originally on Bitcoin. Okay, so this is a long way. The ecosystem has evolved a lot, so not only can you put this token that represents sort of a value on the network, you can also put a token that represents any asset. So you could put a token that represents, I don't know, like I think the biggest opportunity is literally just one of the large opportunities, title companies. Title companies make no sense. Like who here has bought a house? This thing, you bought a house? Okay. A couple people have bought houses. Basically, when you go and you buy a house, there's a line item. It goes cost of house, and then there's this other line item and there are only two. It's like it's a sheet and it has two lines. And the second line item is like a percentage of the cost of the house, and you're like, why the F am I paying this for whatever this is? Literally all they're doing is filing away that you now own that. And you're trusting them that their building's not going to burn down and you're not going to lose that like, I own that house. And that's wild to me that there isn't a system that can do that job. And so with the blockchain, okay, so now we're getting onto the blockchain. Bitcoin, I explained the three opportunities. Bitcoin works because of something called the blockchain. It is the underlying technology. And all the blockchain does is it replaces third-party trust with mathematical proof. So, and what that means is like, you trust your bank, I don't, but you do. You trust your bank that when they take all of the accounts all over the world that they have, and they're adding up all those ledgers, that they're delivering you the amount of money that you have in that little electronic form that you look up once a week or once a day. You trust that bank that they're delivering that to you. What this does is it eliminates that trust. You don't need the bank anymore, and there are a bunch of computers that are adding that up automatically. So that's what that is. So there's a huge amount of opportunity in this asset settlement space, and then that added on to their smart contracts. And the real innovation that's happening right now, our business, but I don't know if we're done anymore, but basically our business is about to get shattered by venture capital is about to get shattered by this concept called ICOs, their initial coin offerings. Suddenly, like, you as a business can go online and you can launch a coin that represents sort of equity. It's sort of equity. It's not really equity, but it's sort of equity. And you can raise money from the market, like frictionlessly, easily, and from the public. Obviously, there are regulatory problems, and obviously that's going to get a smackdown at some point. But it's really, really interesting. I see this huge value that's coming out of this ICO market. Is anyone working on any open source stuff? Are any engineers here working on like open source stuff? Okay. Suddenly, this is a business model for open source companies. It's really, really, I think it's super exciting. And so we're sort of getting excited about this protocol incentive layer that's being created because of these coin offerings. Sorry, I went deep.
Okay. Let's talk about the investment that you made in Xpert. Can you cover examples of the investment you have done?
Proud of all of them. Equally.
Equally? Wow.
Yeah, I mean, like, we're very, like, we become friends with all the founders. Like it's difficult to like say that we're more proud. Yes, some of them become more successful. Like some of them figure out what the opportunity is, and it happens to be a much bigger market than the other ones. And honestly, it ends up being a surprise. Like that has happened enough times now that it's sort of like they come out of nowhere and you're like, oh. And then they raise money, and everyone thinks that raising money is the goal. Raising money is not the goal, by the way. And Duncan sort of referred to this a little bit, where you hack your way to like getting to that A round or whatever. Like raising money is not the goal. Building and changing the world in some way is the goal, and sometimes you need money for that. Sometimes you need money to create a competitive advantage. Our businesses are built on creating competitive advantages for entrepreneurs. That's what money does. Sometimes it doesn't. Raising too much money can actually be a bad thing. And so okay, that's a long way of saying there are a couple companies who have raised a fair amount of money. Like we have a company called Veeam that just raised a really big Series B that's doing cross-border money transfer with the blockchain, which includes Bitcoin, but also includes the old-fashioned way of doing it. He was an entrepreneur who left he sold a company to Western Union, left Western Union, joined our accelerator because we had this expertise in the Bitcoin blockchain space, and he was able to sort of come out of that and just close around with Google Ventures. We have there are a lot. We have 180 startups. Let's see, what are the crazier ones? Oh, we got a company that does it's called Mothership, which is crazy name. And what they do, it's a blimp drone. So it's a drone that is a blimp, so it lasts in the air for like 40 times longer than a normal drone because it's a blimp. And then the use case they're using it for is it's pipeline inspection. So there's a business for a blimp drone, which is the coolest thing ever. We've backed space companies, we've backed we have a launcher company called Bagaviv that is supposed to be able to launch a rocket into space by the end of the year, and they will have raised less than like $4 million. We have what are the other wild, weird ones? I'm constantly excited by things that not everyone sees yet. Like, I get excited when the founder and the entrepreneur get excited. If they're able to, Duncan referred to this also, which was like, know your stuff. Like, if they know their market, their competitors, their landscape better than anyone else, they have an answer for everything, and they've really thought it through. Like, you can't fake it. You can't fake that. But it's I'm gonna colonize Mars, and they give me like a reasonable explanation of how they're gonna do that. Like, I'm always excited because that is just insane, and that is crazy, and I want to live in that world. And that's what we back. We back the change agents for the future of mankind. Yeah.
Okay, great.
What was the question?
How do you select companies?
Yeah. So, I'm pausing because I'm like, how deep do I want to go? I've been explaining everything overly. So we get a lot of applications. So we actually do screen all of our applications, but 60% of the companies that we actually accept come through referrals. So it is a better odds of joining. It's actually 60 to 70 now, so it's like growing. But it's also because our network's growing, so we have like 180 startups who all enjoyed their time with us. They refer companies to us. But it's also easier for startups to get connected to us because there are more companies that have gone through the program. So that's a huge value add to be connected that way. We take a lot of pride in, we will interview basically anyone who's referred, essentially. Not anyone, but a lot of the people who referred end up getting accepted. We filter 400 or 500 applications down to about 100, 120. We take those 100 to 120 and we interview all of them down to 20 to 25 startups twice a year. So we do about 40 to 50 deals a year. And the characteristics we're looking for, Duncan was actually referring to intelligence. It's not intelligence. We aren't looking for intelligent people. I think, tonight it's the opposite of an IQ test to start a business. Like, it is so difficult. And I admire everyone who does, It's just you're constantly running into a wall repeatedly, and that's the definition of insanity. Like, and it's, you know, you get, but there's this mission that's driving you to run into the wall to eventually find like a doorknob or like break through the wall or, you know, elbow someone in the face. I don't know, but so we're looking for tenacity, like and I want to see why you. Like, the thing that we ask in the interview, all the questions we ask is basically just getting to one, which is, why are you going to win this market? And that's all you need to answer for any venture capitalist. So sometimes it's traction. Like, traction is the thing that tells the story of why you're the competitive advantage, is because you have more traction than everyone else. That's a competitive advantage. I have a relationship with, you know, a bunch of people who are going to sell my product through a lot of different vehicles. That's an advantage. Like, figuring out what your competitive advantage is, it can be you as a person, but the reason that everyone focuses on energy and like all these different things is that those are the things, those are the ticks, the cues that show that you have a competitive advantage because you're charismatic, you're good at sales, you're an incredible engineer, you're whatever the thing is, like have a thing. Have a thing that makes you better, and that is what investors are looking for. So.
Great. Any other suggestions to our early stage founders?
Yeah, I'm like super. I read this book recently called Titan. Have you guys read Titan? It's about John D. Rockefeller, who's like the oil guy. Most people know him as. Actually, a lot of people confuse him with his son, who inherited all of it. But basically, I'm obsessed with this concept of distribution as a competitive advantage right now. So this is just, to start a business, this is what you want to do. So what John D. Rockefeller did was he invested in an oil refinery, and he was the most profitable oil refinery because he was better at balancing the books and keeping costs low and not getting swept away and like spending on a bunch of stuff. So he was able to start to like lower his costs and lean on other refineries to buy them. And then slowly what he did was he negotiated a deal with the trains for distribution. And he said, hey, I'm going to be sending tons of barrels of oil through your distribution channels, so through the trains. And so I need a lower deal than you're going to give me, than you're offering me. And so they ended up, you know, agreeing to a term. He wasn't able to send all of that through, so he actually sold his deal to other oil refineries, but he owned the deal. And so slowly he was able to, you know, kick his competition off his own deal. And then, while the trains were shipping all this stuff, he started building oil pipelines in order to replace his dependency on the trains. Basically what I'm saying is he figured out, his competitive advantage was he figured out distribution. He figured it out better, a new way to distribute before anyone else. And he owned it. Like he owned all of the trains because he was able to figure that out. Similar to, here, I'll give you a more relevant today situation. So Gillette. Gillette owned razors forever, for my entire life. But then they didn't see the internet coming, essentially. And then suddenly, Dollar Shave Club was able to see, wait, we can own the customer. We can peer-to-peer own the customer directly rather than going through retail, going through CVS, going through Rite Aid, going through all these other places. And so what they did, I don't think people really realize how e-commerce shifted, like changed. Suddenly you're interacting directly with the brand rather than interacting through all these other services. And that was an exciting shift that they capitalized on. Obviously their competitive advantage was a marketing video that was epic. And then they built this huge business that ended up getting bought by Unilever. So I'm really hooked on like this general concept of owning distribution, figuring out where you're distributing, because that ends up being why you win. And that's why growth is what venture capitalists look for. They're looking for growth, high growth, because that means that you're going to own all of these customers. All the customers that have already signed up for your service, like they spent time on your service. So the LinkedIn is a story about it, a quick story, and then I don't know if you guys have questions or anything. LinkedIn, they had Josh Ellman came in and spoke. He worked at LinkedIn for a little while, and they had a 3-part plan to take over the world, essentially. By the way, it took LinkedIn a year to get 1 million users. Today, like that's laughable, right? Like people will get 1 million users if it's a bad game on mobile, and like that's crazy. But in 2 days they can get that. But it took LinkedIn a long time because they were figuring out distribution on the internet. And what they had, I forget it was G for growth. I want to say U for usage, and then R for revenue. So they had a 3-part plan. First was growth though. Proving that distribution matters. Like, I don't know if you remember this, but the first time you signed up for LinkedIn, you didn't really know why you were signing up other than like someone else signed up. And you were like, and then you were like, I can't do anything. Like I filled out my resume, and now it's there, and now I'm gonna leave this for a while, and I'm never gonna actually log back in. For like a year, you didn't log back in, but then all of a sudden they started focusing on usage after they hit a critical mass on growth. Once they figured out growth and all the levers they needed to pull in order to get the growth and just get people to sign up to a certain level, they were like, okay, we own those people. Now, usage. And then they went to usage. And then their engagement went through the roof. They figured out, recruiters really loved it. They figured out like all these different things. Then, and also there's this really cool thing where everyone thought that it was a job board. Everyone thought it was a job board, like LinkedIn was a job board. And it wasn't, like internally, they were like, it's not a job board. Like, how do we get people who are in companies who don't want to show the signal that they're trying to get a new job, like on our system? And so that was a huge problem. So what they did was they launched a job board. So then all of a sudden, like there was this mental break between what LinkedIn was and a job board. I thought it was brilliant. And then the third stage was revenue, and they started pumping revenue. So distribution. That's what I'm going to say. Like, figure out your distribution, figure out how to own the market. That's the competitive advantage that lasts.
Great. Any questions or comments?
Yes, that I'm very impressed. One of the things is that Netflix series, Men Who Built America, and that the Vanderbilts and all these Rockefellers, how they made it. It's really worth watching the series on the Netflix.
There's a
series
on
called
Netflix.
Men Who Built America.
Okay. And by the way, like when I read this book, we're still dealing with everything like Rockefeller built. Like that's basically what I took from this. This book. It's really long. Just listen to it on tape. Yeah. What's the question?
Blockchain technology is the most undervalued technology that I feel that Bitcoin got a negative connotation, especially blockchain.
Can you just take questions?
The question is that I have is that for you, you're in BR and the blockchain. You think you see because of the negative situation with the Bitcoin, the blockchain is undervalued now. That is going to affect the entire blockchain technology. You think?
So what happened in the industry, not to if you go too deep, was so we were like, oh, Bitcoin's the thing, like it's the coolest thing ever. The usual like we're really excited about it because the price keeps going up. And then Bitcoin took a dive, but also all these banks, they weren't able to admit that Bitcoin was cool because there was this negative connotation because it was used to buy a bunch of like drugs, guns, and like bad things on the internet. I don't know if all of you know about the Silk Road, but that was like one of the major like big busts and a bad black spot on Bitcoin's like whole history. So like the CEO of JP Morgan wasn't able to say like Bitcoin's cool. So what he did was he said Bitcoin's never going to last. But blockchain, I think there's something there.
There is definitely something.
And so basically then the enterprises said, okay, Bitcoin's stupid, but blockchain is awesome. And there wasn't really any way at that point to parse the two away. So whenever people were talking about the blockchain, they were actually meaning Bitcoin. But over time, what has been happening, so right now, blockchain is not sexy. So it went through this huge spike where all these banks, all these institutions were all jumping in the market. Millions of dollars. Banks and all these people still have like blockchain research institutions. Like every day there's a new like innovation lab that's experimenting with the blockchain and Bitcoin. But then like the POCs, the proof of concepts that all of these banks and institutions funded, they haven't like moved as fast as everyone wanted them to. And so we're going through a dip. But at the same time this dip is happening, Bitcoin's like going sky high again. And so like what I've seen in the market is that there's this thing called Amara's Law. Basically, it means that technology, there's an assumption of how technology gets adopted, which is linear. Everyone assumes that it gets adopted at this normal, up to the right pace. What ends up actually happening is that there's this huge uptick initially, and then it drops really, really low, and then it exceeds expectations in the long run. So I've seen this with Bitcoin, like over the last 4 years, where we're on a huge uptick for cryptocurrencies and Bitcoin and all that technology and protocols. And we're at the dip for blockchain. So I think it's undervalued. I think people have identified the use cases that it's going to be used for, but it's just taking longer to actually implement. So
That's good. Big hand to Adam. Thank you.